Welcome to Nasdaq Trade Talks. I'm your host, Jill Malandrino, global markets reporter at Nasdaq. Joining me at the market site in Times Square for a midday update on the stock market, we have Charlie Brown. He's the managing director on Nasdaq's market intelligence desk. We're going to take a look at the retail sector in particular and its lagging performance. Charlie, it's great to have you with me as always. And before we get into retail, 1 o'clock, some headlines hit, and so did the semiconductors and the rest of tech, sending the Nasdaq 100 and the other major averages down with a delay in trade talks.
Indeed, it did. There was twofold actually related to trade. One was the Senate's passing of the bill to protect Hong Kong protesters, which drew immediate rebuke from China. And then the other shoe dropped when Reuters reported that a trade deal might not even happen this year. It might be pushed into 2020. So that's really put some pressure on the market.
And I'm really surprised because we saw that the Hong Kong bill come out pre-market, and it didn't really move that much. In fact, the Nasdaq 100 went green around 11 o'clock for a couple of ticks. But this 1 o'clock headline really spooked stocks.
Yeah, I think the 1 o'clock headline spooked stocks, and then also more detail came out about the vote. With the House expected to pass it, it would then go on to the president's desk, and he's got a real dilemma on his hands. Does he protect protesters' rights and go against China? He needs this China trade deal for the election.
Yeah, I'm not enviable of that position, that's for sure. Let's take a look at our first chart. This is the retail sector underperforming the S&P 500 this year, and for good reason. I mean, you're either hot or you're not in retail.
It's been a real mixed bag in retail so far. We had yesterday where we had Home Depot and Kohl's come out. They missed and they guided lower. Then today we had Target and we had Lowe's come out, and they beat and they guided higher. So we took a look at the chart over a period of time, and the XLT is only been up 6% for the year versus the S&P 500, which is about 24%. And you can see ever since 2015, it's really been range bound from that 51.25 range to 38.40. Doesn't look like it's going to go anywhere soon, although for the last 3 months it has been on an uptrend. And also the 50-day has crossed over the 200-day moving average, which tends to be a bullish signal. So we're keeping a close eye on it.
Yeah, it's really interesting, the retail sector, because if you're in the space, the discounters, the TJ Maxx and the Ross stores of the world, you're doing well. But if you're in department stores or some of the big boxes, it's pretty tough.
It's tough.
All right, let's move along to our last chart here. We're taking a look at the Russell 2000, which is interesting because that was actually a bit green this morning relative to the other major averages being down.
It was. The Russell over a period of time is often forgotten because of the big three, and it's lagged behind this year so far. It's only up 18%, so it's not up the 20 to 30% that the other big three are. However, what we've seen lately is every time it's tested that 1600 level, it's come rapidly back down. So you can see in May, in August, in October, it's immediately dropped. Most recently, it's really hung up by that 1600 level. And we've also seen, looking at the breadth, we see more and more small cap companies hitting 52 and 24-week highs. So that usually leads to a price increase.
All right. Thank you so much, as always, for joining us at the market site. And thank you for joining me on Trade Talks. I'm Jill Malandrino, global markets reporter at Nasdaq.